Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So we'll go through our regular agenda today, market update. We'll update the earnings trades and end up with Joe's analysis. So let's get started. We're under a week from the election and a little over a week for the Fed. So those things are be an interesting week next week. So let's take a look at market. So all the indices, major indices are still holding in state one. Been in there quite a long time. You can see here 53 for Dow, 52 SPX. So sector wise, almost same as last week, but energy just flipped to that was yesterday. So still holding there. Hold on, we got people joining. All right. Pie wise, so we had to drop 63, so we're still above 50. We're at 55 right now, and you can see we're below, or we're no longer overbought, which is above 45 in state one, so no longer overbought, not oversold. So that's about it there. Let's look at the, excuse me, got a little bit of a cough. Let's look at the different states. So this is state one. So, we hit the recent high was 51. Before that, we got 53. And just kind of meandering down. We're at 43 last time. This thing turned right around 40. Um, Nothing really going on with state eights. Pretty flat. And this is since, September. So the whole month of October, pretty flat for state eights. And we did have a little bit of pickup in twos, and this from last week. Um, so this little pickup seems, it's plateaued past couple days here, and then, we always want to watch fours as these twos pick up. See if we get some kind of action, big downward action when those twos go to four. So this a little pickup, from last week we're at four, we're at six, so a little bit, just kind of keep your eye on. But the twos aren't doing it this kind of like parabolic thing like they did back here. Just like straight shoot up on the twos. So been very peaceful and orderly. Slow numbers of transitions, not huge numbers, and you can watch that daily count here on the transitions. So you can see 31 to state one and 54 to two. So not big action, but yeah, something definitely pay attention to. The highs, lows. So the highs have really kind of died off here. Lows still nothing. So pretty much sideways, as far as the market. And I think the market from last week we're pretty much, right where we were, within a point or two. So pretty flat. We have held key levels, so that's what I think the big thing, to take away once we get to them on the charts are those levels, and we talk about them all the time. So this is so this is the 50s, the 20s. Sorry, I'll do the 20s first. We're nowhere near the 200s, so but 20s did flip. So it's last week, so they've been kind of they did flip, kind of come back right level, and now they're up a little. But a lot of these big downward moves are like um, when the 50 flips. You can see here big down move, 50s flip here, big down move. So even here, it's just 50s. So that's something I'd keep an eye on. Got real close here. Um, the support held on the major indices, and still, we're in striking distance where, we could get some kind of short-term pullback, but, a week out from the election and Fed. I think the big thing we got some numbers. I'll talk about that kind of just real quick. We got some numbers coming out tomorrow, and then Thursday. Yeah, here we are. So we got price index, we got core PCE, PMI, all coming out tomorrow. PC price index, all this stuff. So, and then Friday's a jobs report. So yeah, that can definitely move things. But yeah, this you know yeah, if we get across, I'd say we're going to go lower. We're within striking range, obviously, of the 50s crossing, and that's for all the symbols that we track. I think what are we at 4,013. So, and yeah, nothing big bullish bearish, just a slow kind of meandering down. Yeah, which we saw on the front page there. So yeah, usually we do get crosses, but occasionally we'll get that touch and go right at the 50 level. But most of the time it'll drop like this or like this. Um, so if we do get down there, but I think yeah. So let's talk about the key levels. SPX, yeah, we've been in there pretty long, an extra 9, 10 days so far on average trading days. So hit all the targets. So I guess we didn't touch target 3, but that's going to be your resistance to the top side. Getting above that level. So that's big resistance. You can see here just quite a few days. It's pretty much like a week of trading. Battering up against that level. So 58.79 is kind of the ceiling. Getting above that would be very bullish for the markets. And then kind of to the downside, there's not too much on this chart. These usually aren't strong support. Um, the target 1, 2 on the way down. But this was basically right at the 20-day EMA. The 20 days pretty much like right here. So it's this was testing right on that 20. So that's the biggest one that we'll pull it up on the chart. So these can be somewhat a little bit of support, but nothing like like entry price or target 3, especially on the way down. If we get down there, so but yeah, it's been a good stable one there. So let's look at the charts. So you can see that one down day there. We had 50-day was at 57.83. Yeah, we got below that, but ended up closing above it at 57.97. Same thing here, kind of touched the 20 yesterday, touched 20. So we're right at basically 5,800. I would say probably today for the 20-day EMA. So, and that's the bottom of the range. I'm still hesitant to call, say we're in this new range because we haven't really broken away from 5,800. Um, this is the previous range. But we're really testing that level. So, and we break the upside, the top side of this would be this range is 6,200. So, but the key is holding that 20. So that's why I'd be watching. And then, below that's 50, obviously, about 100 points below. But when we do break 20s, you can get some corrections and things like that. So as long as we're holding a 20, I'm still bullish. But until then, you know, so basically 5,800, and we're up today a little bit, 58.38. I mean, we're right at right in the neighborhood. So that's what I'd be watching for SPX. Same thing, Russell. Last week we're talking holding that entry price, so didn't get that close. Within I guess it was, 6 points. So it got pretty close, but ended up closing pretty far away, and it's held entry price, and which is basically 2,200, that level. But we got a range here of, the top end has been very difficult, 2,300. There's the bottom 21, and then like every hundred's kind of support and resistance. But this getting above that, be very bullish. Closing above it for a few days. Uh, we haven't really touched it since back here. Um, so we've been in pretty much right on average days, and didn't quite hit the average move, but did get up to target too. So same thing with this as we go to the chart. Yeah, going in a little tighter. 50-day. So that down day for S&P held to 20. This was same thing, held to 50 for the Russell. You know, pretty much just touched it. You can see the low was 21.95, 467, and then the 20-day was 0.77. So just touch it, close pretty far above it, but same thing as S&P. We got to hold the 50 here, and this one's at 2,200 exactly. So and that's right in the same area as that entry price. So that's big support there, and then the huge resistance here is going to be let me draw the lines 2,300, and that's the bottom 20. Whoops, sorry, wrong one. Oh, no, clear. Sorry, that's the wrong one. Yeah, 21. Okay. So we did touch 23 back here, but it's just so bottom's 21, and that's right at basically the 200. But holding this, and then 20-day for the S&P are, I think, the keys to the momentum kind of churning higher. At least the election, but we got to hold those, or if not, I'd expect like the 50 moving averages to flip. We got a nice little pullback, and we'll, I think, wait until post-election, whenever the results are actually final, for kind of where things are going after. Um, okay, yeah. So both those are still they're up today, holding above. Just kind of keep your eye on that. 10-year, not much action. In the past week, it's kind of we were back here, so pretty much right where we were last kind of meeting. So yeah, nothing much. Kind of 4.25. Fed, I don't think much to talk about there. Fed is Thursday instead of Wednesday. It's unusual, but pretty much a quarter cut is, I would say, pretty much guaranteed at this point. Above 90 within a week usually is pretty locked in, unless something leaks out about something. But and then same thing for December, expectation wise, another quarter, so 50 by the end of the year. So these have really changed since we've been tracking them. So, and balance sheet, this perspective, so wait, this whole thing getting crazy. So we're almost down to 7 trillion, which is kind of like a right COVID initial pump level. Just kind of crazy looking at this chart. This one right here, like 3 trillion. So not much else there. I'll open up to comments, questions.
Everything's on hold till the election and the Fed, I think.
Yeah, I think more so election, but yeah, I think, I agree.
I don't think the market's going to move very much till then.
Yeah, I mean, the employment and inflation numbers, I think, can move things, if they're way out. They're usually not way out of whack, but that could, you know, or people's, start, being certain on the election and, putting their money one way or the other. It could move beforehand, but yeah, I I would be hands off.
Yeah,
Thanks, Sadir.
there's still a big week for earnings, by the way. And
Mm-hmm.
I think Microsoft and Meta, I think, report tonight. Google reported good news last night, so it seems like I wouldn't expect any downtrend for the major indices, especially the SPY or the S&P or the Qs or the Nasdaq.
Yeah.
But then we get to the election, and I'm just wondering how long the market will tolerate, a non-certified election.
No, they may not have a choice.
Yeah, right. So
Yeah, Microsoft, Meta. Yeah, Eli Lilly's getting killed today. Yeah. Yeah, it's still a
AMD
lot of earnings. Hmm?
AMD reported last night they were down significantly, I think 10% today. So
Really? I didn't see
sometimes
that.
they had reported good performance on other launches, but their year-over-year numbers were not as good as market wanted. So
Oh, wow. Yeah. I still remember when this like a $3 stock. So
yeah, it's kind of crazy when a company reports record levels of earnings and whatever, and they miss
taking
all
that hit.
expectations.
Yeah.
Anyway, we'll see
Yeah.
what
All right. This thing just froze. All right. Bye. Okay. Yeah. Thanks, Dave. Thanks, Sadir. Anyone else? All right. I'm going to go through earnings real quick before I hand it off, hand it off to Joe. Okay, so we got those pre-runners. We got one open. Did close another one. So Exxon's open. It's down a little. We got till tomorrow. So this one may end up a loser. The four we have closed out. I'll hit the profit targets. So NXPI was within the past week. So overall pretty good. Maybe we get a bump from Exxon here before uh, their earnings before we had to close it out. Bearish pre-runners, both are down. I think on Moderna. I don't like saying that name for some reason. That one down pretty good today. So, but yeah, both these are in the negative. Still got a week left on those two. Nothing closed out there. Bullish runners. So Goldman GS was down a pretty good chunk, but they've been coming back. And then this trucking one is up right now. So yeah, but nothing closed out there. Um, Vol rise. So we get two active. One did close out. So both these are up. These have been good. I mean, with the volatility in the market, these have been pretty strong trades. So we got two of these next week, the 11th, and this all the way to the 11th. This one the 7th. And then we had one close out XPO, nice profit right before earnings. So this continues to perform well. And then our last one was non-mover PII. Uh, so I'd like to talk about these charts. Like these expected moves. So like we set these up. So it came down, basically hit that expected move level, which is 70. Show support, and then we get some climb back up. I think in the future I'll try and find trades where it hits the expected move, like holds there, and then we can get into the original trade for real cheap and but I'm a ways off from being able to do that in the system. But this one has come back, so hopefully continues back. We can hit profit target, but at least profitable. So, but that's it as far as earnings. Any questions, comments? All right, well, hand it over to you, Mr. Joe.
All right, Josh, thank you.
Mhm.
Thanks for the analysis, and hi, everybody. I would agree, Sudhir, and I just think the market's not going to do a heck of a lot between now and next week, even though we do have some pretty good numbers coming. And one of those numbers, Josh and I were talking this morning, looking at the upcoming numbers a little bit, and non-farm payrolls popped up. And what was the consensus, Josh? Like $1.10, $1.15, something like that?
Mm-hmm.
And that surprised the heck out of me. We had, I guess, 2 months ago, a low number in that range, and then we got a much higher number last month. But since we were talking, Josh, I saw a piece from First Trust Advisors, and they're talking about a 101,000 increase in the non-farm payroll. And it's really a special situation related to the storms and strikes. So They think that ADP and the government, they kind of look at things a little bit differently. They anticipate unemployment staying at 4.1%, but they're looking for just 101,000 jobs. So that number in and of itself would have surprised the heck out of me, but given that there are some special situations, maybe not as much a surprise, but just wanted to put that out there. And as you can see, we continue to tweak different things to the platform. We're trying to work on performance on the back end too. Josh always driving that in terms of trade scanners, custom screeners. We're changing some things. So always open to your feedback, but it continues to be a work in progress. So let's see. I think I want to start here today. Okay, a little bit of got the election coming up, so let's look at election cycles. And this is the great source at the London Stock Exchange with the past earnings. This is S&P 500. So the top box, we've got the Obama presidency, basically 2012 through 16, the S&P 500 earnings. You can see we're, basically stable, but if you take it from 2012 through 16, I think you had about a 14% improvement in overall earnings in that particular cycle, about 14% earnings increase. Let's go to the charts. Here is the S&P in that same period. We're talking just before the election, which was November 6th of 2012. S&P was at just over 1,400, and 4 years later, closed just above 2,100. Okay, so you can see any drawdowns, but 14% increase in earnings, and this is what you got. About a 50% return in the S&P. And I didn't take into account, obviously, coming out of the financial crisis, multiples were somewhat depressed. Obviously, that's a huge factor in all of this. But I just thought, looking at the last 3 presidential cycles may offer a few insights. So here's the SPX. Here's NDX. And, NDX, where the S&P was up about 50%, NDX up closer to 75%. I also, I didn't analyze, the overall volatility in these things, but just wanted to, give you a sense of earnings versus movements. So that's NDX. And then here's the good old Russell. The Russell was up actually 45%, so almost kept pace with, you know, the S&P during that period. Let me see, we got, where were we, November. So coming out of the election result in 2016, the Russell did, you know, take off aggressively, okay? So, you know, I thought that's why I have this extended a little bit, you know, on both ends. But, yeah, the Russell took off with the change in administrations in 2016. And then last but not least in this cycle, there's a look at rates. You know, pretty surprising to me that, you know, rates started and ended, you know, TLT at a very, very similar range with obviously, you know, some movement around, but, you know, they started and ended at very close to the same point. That's 12 to 16. You know, next, you know, we got the Republican administration, and, you know, S&P over this period. Well, let me back up. Actually, let me go back here. Earnings. So if you take earnings, so backing up, you know, we're up about 14% in the 12 to 16. And again, these are just the S&P 500 earnings. From 2016, and I didn't go to 2020. I took it to the peak period in 18 and 19. So, you know, you had about a 38% increase in S&P earnings, you know, in that period from about 2016 to 2019. I think, you know, COVID was a wild card. I don't think it's really fair. I think, you know, chances are momentum would have at least stayed flat, if not, you know, continued. So from an earnings perspective, S&P up about 38%. I wasn't able to track down, you know, specifically the NDX and Russell earnings in these periods. You know, if I am able to do that, I will, you know, bring that to the table in the following weeks, but couldn't find them. So here's S&P. Just make sure I get the right one here. Yes, from 2016, it opened, you know, just above 2,100, and in November of 2020 closed at just under 3,400. So about a 57% increase, you know, in the S&P over this period. Obviously, there was a not insignificant drawdown, you know, in December of 2018. It's when the Fed started talking about rates. And we got a significant drawdown there, but things back in order, you know, pretty quickly. And, you know, and we had COVID. So quite a wild card. But net 16 to 20, the index was up about 57%, 57.5%. NDX, whole different story. NDX, you know, a real rocket shot, you know, up about 135% in this period. Similar drawdowns, you know, in the December 18 period and then COVID, but, you know, technology for many different reasons, which, you know, I guess we're all fairly aware of. This thing, you know, outperformed significantly, and, you know, there are the charts and the numbers. So that's NDX. And then finally, the Russell didn't compare to the other two, but, you know, had a 35% gain over that period. And also, let's see, that was November 3rd. I think, did we get the same thing? Yeah. Oddly, you know, right after the election, the Russell took off as well in this period. So kind of interesting. And then There's TLT over that same period. Rates certainly headed north. Despite that, you got some very significant returns, to say the least. So last but not least, well, let me go back actually to the all-important earnings sheet. And here we are. If we look at earnings over this period, we've had the greatest increase in S&P earnings, over the course of these 3 cycles. Earnings up about 50% in the S&P, assuming we're going to come in, close to this 244 number. And so I just, the source that I talk about from time to time, the London Exchange, the box at the top, that was in the May period. And then as of last Friday, I just circled these things. These guys don't mess around. I mean, they get in there. I'm sure they've got big staff, and they get in and they refine these numbers. They're not significant changes, but they are changes. And they had interim changes as well between May and last Friday. But you can see that, overall earnings, bottom line, have dropped, by a couple bucks, not expanded, which I thought was a little bit interesting. And, as I said, earnings overall in the most recent period up about 50% in the S&P. And back to our charts. Just got to find them. Here we are. SPX, was about just under 3,400, and we're banging up 58, 5,900 now. So, in this period, the S&P, with the best boost in earnings in this period, S&P has had its best return as well, up 73%. And certainly had plenty of state ones. Josh's favorite 1-2-1-2 pattern here. So that's SPX. NDX done wonderfully, not quite as well as under the previous administration. Back to really the 2012-16 range, up 82%. 12 to 16, NDX was up 74%, then 135% between 16 and 20. But also in state one, so just going to be interesting to see when we get through next Tuesday, how the market reacts. And just a couple more. There's Russell. Russell just pretty darn consistent, up 38.5% over the period. So, Russell, we had plus 45% in the first period, 35% between 16 and 20, and just over 38% now. Again, that 1-2-1-2 pattern that Josh frequently refers to. We're actually going to do some homework on that, and when we get some findings, we'll certainly share that with you. And we pretty much know what TLT looked like over this period, that's for sure. And, despite considerably higher rates, there have been some very, very strong returns with the S&P at 73%, NDX at 82, and Russell at 38 and change. So just want to go down memory lane a little, not so much memory lane, but really, the different administrations and how things have been impacted. Russell, not much at all. NDX, outperformed SPX and has consistently, we know there's more growth, more volatility. And SPX really has been, I won't say slow, very steady, with its 50, 57, and then 73%, upward move. So as we've been talking about for a long time, I think this is the key. Are these companies going to deliver earnings? If they are, the markets are going to continue to surprise to the upside, in my opinion. Growth rates, productivity, as Dave's always talking about ROI on the CapEx, some of these things are tough to get our hands around, but Josh and I'll keep working to see what we can find. And as long as the earnings keep growing, I would think the market's going to do pretty well going forward. So just one more I wanted to pull up, not related to this. Well, actually two, I guess. Josh pointed out we had, I think, 8 daily trades today. I think he said 7 of them were home builders. Is that right, Josh?
Yep.
Yeah, crazy. So I didn't get a chance to get in and look at all those different trade types, but I thought I would put up.
I traded a few.
Okay. Yeah. I mean, that's shocking. And did anything jump out at you, Sudhir, as to, the consistency in those 7?
No, I mean, it wasn't 7 home builders. I mean, for example, which one? I think it was Pulte was listed in 3 different categories. Like
Right.
it was listed 3 times, like
10%.
1-year SPX correlation,
Yeah.
and then it hit on the Keltner channel thing
Yep.
as well. But yeah, all the home builders being in there struck me as kind of unusual.
Yeah.
And, I don't know why that would be, if there was some announcement or something that would cause that.
Yeah, I don't know, but I just pulled up the home builder, ETF just to take a peek at it. State 2, we don't really talk about this too much. Obviously, it's done very well, but in state 2, and like a lot of the charts over the last, really since July, there are new highs, and these are obviously more recent new highs. So you have these monster runs, you get it back and fill. Whip-de-do. It's how the markets work, constructive movement. So Pulte, and then I pulled up the our sector ETF XLRE, but there aren't so many home builders in this thing. It's a bunch of different things. So I don't think that was so much of a proxy, but be interesting to see whether this home builder spider will whether it'll hold a recent gap down. I forget the symbol in Pulte. I thought it was PLT, but anybody know the Pulte symbol?
PHM.
PHM?
Yeah.
Okay. Yeah. I haven't looked at that one in a long time.
Oh, it's 6 were home builders. All right, miscounted.
What's that, Josh?
6 of the 8 were home builders.
Yeah, I mean that's something else. So yeah, well, right now it's an ABC to the downside and nice correction coming off of the July lows. But yeah, I'll have to check the news to see if there was something that was dragging down a few of those guys. So
Might have been home sales
Anyway.
or something like that.
yeah, it could have been.
I don't
So anyway,
pay attention to that much.
Yeah, me either generally, but I just want to give a little history on market performance, with the different administrations, and happy to take any comments or questions, or turn it back to Josh.
All right, well, this is good perspective, Joe. I hadn't, broken that out like that, as far as the previous, with the election coming up, I think it's very pertinent, kind of look back at this. So thank you for that. All right, well, since there's no more questions, we'll just wrap it up, and we'll do it again next week, and maybe we'll have a president, probably not by meeting time next week.
Yeah,
Anyways,
unfortunately.
have a good week, everyone. Thank you.
Yeah, good luck, everybody.
Thank you.
Bye, everybody.